Let's break those numbers down now with Wayne Mccurrie from FNB Wealth and Investments. Wayne, thank you for your time this afternoon. Let's start with the JSE's overall performance. Is it just global catalysts around the stimulus package in the US, as well as what we're seeing in terms of COVID-19 infections, really having an impact on how trading on the local bourse went today?
Yes, look, very much the local bourse is affected by those factors. But understand the market's actually not that concerned about any second wave or third wave resurgence, because there is a vaccine on the way and it's in the relatively near term as far as share prices are concerned. So I think the COVID scare is actually out of the numbers, surprisingly enough. The market's not concerned about that. Obviously, the nearly $1 trillion worth of stimulus potentially coming out of the US is massive. But as we all know, we've seen a strong rally in our market since the weakness we saw earlier in the year. And our market's trading at basically at historic highs again.
Right. And then with the rand, we're seeing it below 15 against the US dollar.
Yes.
Is that still got to do with dollar weakness, or are there some other elements that are influencing trade with the emerging market currency?
Look, it's mainly dollar weakness. All emerging markets have done well, which is what you would expect in an environment where the global economy is recovering. Emerging markets should do well. There are some elements of positive South Africa in the stronger rand. I mean, the economy is probably not as bad as what we thought it was going to be 6 months ago. And lots of companies have said, you know, we're having a tough time, but not as tough as what we thought it was going to be. So there is probably some element of positive South Africa. But as you said, it's mainly dollar weakness.
Right. And to some company news now. Let's start with Delta being suspended from the JSE. Did you see this coming after some of the news they shared last week?
Yeah, look, I mean, terrible situation there, lots of fraud, and they withdrew their financial statements, and there was a special investigation, and all the senior management's been changed, and they're saying we did nothing wrong. But yes, given such intense news flow, such negative news flow in the company, it's not unusual for a share to be suspended. And they have said that it's a temporary suspension until they can re-release the financial statements and get to the bottom of all of the allegations of fraud and corruption, etc.
Yeah, Wayne, I also want to reflect on Phumelela last week, Friday, if I'm not mistaken, saying that they will be delisting from the JSE just because they've got too much debt that they have to deal with. Was that the best option for Phumelela? Was really no other option for investors to consider?
Well, look, whenever a company comes to delist and people are putting up the money to do a delisting, they clearly think the share price is cheap at this level. And Phumelela hasn't benefited, quite frankly, at all from a JSE listing. You know, it's not able to raise capital at the current share prices, and it's very expensive to maintain a listing. So probably if you keep your shares, it's probably the best thing that could happen to you. But it is unfortunately another failed company delisting from our JSE. And these are all small cap companies that are all essentially consumer-facing companies.
All right, and then just a final thought from you. The president has spoken, and I just want to get your outlook on hospitality, retail stocks, liquor stocks, given what the president has spoken about in terms of restrictions, and really just their outlook based on what they're faced with because of the coronavirus.
Look, there aren't too many direct sort of consumer service companies and leisure companies listed on the JSE. The retailers won't be that negatively affected. I mean, the alcohol sales will obviously affect them, but it's also, once again, for a relatively short time period. And who knows what's going to happen in the new year. It might be lifted, it might be extended. But once again, quite honestly, I think the market's fairly impervious to news on the COVID. There's been so much bad news around the virus. You know, another 2 or 3 weeks of restricted liquor sales is not going to make that much difference.
Wayne Mccurrie, as always, many thanks for your time. He's from FNB Wealth and Investments.